Morning everybody, it's Chris here from Serene Education with the 4 Majors Analysis Update for the 17th of April 2012. Just going to start with the Euro against US dollar, looking at the 4 time frames, the weekly, daily, 4-hour and hourly. Let's go with the daily. Okay, so what did we have yesterday? We had a physical test of that 1300, that psychological 1300 mark. You can quite clearly see marked out by a fib retracement area from the previous hour recently down, and we had it. We've seen the 23.6% here at 1300 being tested. Ideally, we'd like to see a break and close lower than that. However, that didn't materialize. Asian session yesterday clearly sold into the 1300, but then by the European session open, going into the latter parts of the morning, we saw more buying sentiment coming in, and by the end of the day, the price had actually pulled higher. So 1300 has to be broken in order for this to still remain negative. We are still seeing lower swings, which dictates price action to the downside. However, as long as 1300 remains in place, then it will be a very strong support. Okay, so it's vitally important that 1300 is breached in order for this to still remain bearish across the board. The longer it goes sideways and finds support, the more likelihood is we could see price now being squeezed, okay, with a chance of upside movement. So as long as 1300 stays in play, then we could see price moving towards this area again and again and again. So it's vitally important that we see this area being breached if we are to see further extensions to the downside for this pair. So as you can quite clearly see here, through February we had a bounce back again. We retested this support area again in early mid-March, and again just before the early part of April, and once again yesterday. So very, very strong support, psychological support. If we do indeed get a break and close lower, so you would have to wait for a daily close, then you would definitely look at a pullback of some sort, roughly around the 1290, 129500, back to the underside, and then a continuation lower to at least the 126500. We've been there before, and there's a nice movement, clear air here compared to all this indecision here as we've seen quite recently. All the moving averages above price and CTC is in our favor. We have red across the board on our daily, which is fantastic. That's exactly what we want to see. So we know that on our hourly intraday, we'd like to see at least a 4-hour on hourly candle closing lower. A nice bullish engulfing over here, for example. Not a very definite signal that the price was definitely looking for downside. Price was hugging the upper end of the candle, almost forming a hammer at a support, and then we saw buying power coming. A nice bullish engulfing all of this this downside movement chart, and then we saw price rally. It's the same thing that happens over here. Price support on the 12th. Not only really in this one, but we had a support, and yet again over here. However, we're still trading below the institution moving average, and as you can quite clearly see, we are swinging lower. Okay, very, very, very important. Price is swinging lower. So these are the previous highs that we had here. Take a fib retracement to the bottom. You can see the 23.6% mark was breached. We found support on the 4-hour, and then we went up to we targeted the 38.2. Once it reached the 38.2, you can see a lot of hesitation here. Price has reverted back. A nice little bearish engulfing candle at the top there, almost a bearish arami of some sort. We had an indecision, and then now we're targeting the 23.6. If it fails to break 23.6, then we could see a reattempt of this trend line. Okay, this downside trend, before we see a reattempt of the institution. If price fails and closes lower than 1308, then we should see the likelihood of price reattempting 1305 or the 1300 overall as we head towards the bottom again. It's vitally important. You can see quite clearly here that the institution moving average acted as a ceiling level, and yet again we're having a failure even before we get to that level. We could see price moving higher, pull back, then a continuation back up to test these things. So this area here at 1308.50 is quite important. If we find support at this area, then we could see the institution moving average retested quite soon. If not, then we could see price just falling over completely, and this move over here was just a psychological support for any of those who are trading down into this area, shorting the pair into the 1300, taking profit, and now they're going to reattempt those lows at 1300. Our hourly entry, notice this 1320 or 13200. That's our 23.6% retracement on the daily. Quite clearly failing at the first hurdle. Even though we crossed over the institution, a lot of buying sentiment creeping into this. RSI trading above the 50% line. However, that failed to materialize, failed to break above that 23.6 psychologically exhaustion candle, and then a further shooting star at a resistance level, bearish engulfing to confirm that, and then we saw selling down into 1300 yesterday. However, we've seen a bounce and breaking above the 23.6, 38.2, failing. Now it's trading above the institution moving average. It's got to remain above the 23.6 here of 1308 and above the institution moving average to confirm this is just a pullback on this buying indication yesterday, and then we could see the top end reattempting and then back up towards the 13200. RSI is testing this area here. So this hourly candle, we've got a red. It has not closed yet. Okay, this physical candle has to close. If it closes higher than the 23.6, then I'd wait to bide your time because we could see a potential bounce before we see 38.2 and the 50 being retargeted here at 1320. If price breaks lower and closes lower on the hourly below this 23.6, then the likelihood is the RSI will dip. Then we have everything looking short, and then we should be looking back towards the 1300 for the remainder of the day as our first target. On to sterling. Let's have a look at the daily. What's been happening? Well, yesterday we saw, like its European counterpart, support being found on the institution moving average as well as the 50. A lot of support through here, guys. You can see roughly around the 15800, or you can see these two lines over here. These are two fib retracements between the 15800 and 850, or 158,200. There's a noticeable consolidation area. A lot of support through here since the mid-March. We've seen a bit of hesitation before. However, recently we've seen a lot more action around this area, which coincides with the institution moving average. Now, we've seen a lot of reattempts of 1600 recently. Through mid-March, we had a nice little breakout at the end of March. However, we had a spinning top. We wanted to see a decision candle after a spinning top because it's an indecision. We want to see a decisive candle. And we got a bearish engulfing, which actually formed an evening star at a resistance level, and price reverted to the downside, retempting this 15800 mark where we had hesitation before. We went there before in early March, so we went back there again in early April. Yet again a reattempt in mid-April, and then we had a bearish engulfing on Friday. Then Monday we had this nice upside move just on the same area here. So price really trying to forge a nice support on the daily around this area. The close on Friday forming a lower swing. So what we have is we have an all-time high. If you take the wicks, then that's what it would look like, pretty much. Lower swing, ideally like three ideal highs or lows in this case, but you can see now it's being squeezed. The previous attempt before Thursday and Friday didn't quite it fell short of 1600. The prior attempt actually closed higher than 1600, have failed to do so. So are we seeing a bit of a squeeze now where we're seeing market sentiment change at this level? We're seeing a definite change from more of a buying stance to more of a bearish stance, even though we are reattempting that. So is it a case where we're seeing more selling contracts being filled now and less buying contracts being taken up? Well, if that's going to be the case, then ideally we'd like to see this floor here at 15800 being broken as soon as possible. By doing so, it'll take us below the 200, the 50, as well as the psychological support, and then we'd like to see price actually finding resistance under this current support, and then we could see the 15600, which is our long-term weekly outlook fib retracement here or support area, being our next target. Below that, well, you can see there's quite a lot of emptiness. There's a slight hesitation in between all this, but ultimately we're looking way back down to 1525. We've been there before. There's no reason why we don't have to be there again. Okay, so as it stands now, you can see the CTC on the daily is very much blue on either side. Yes, we've had hesitation, but as long as it maintains above the institution moving average and above this 15800, the more likely is we can see a reattempt of 1600. 1600 is a very psychological support and resistance, very strong one. Okay, on the weekly, it's the institution moving average. If I take you to the weekly, you can quite clearly see the last 3 weeks. Leading up to this week, you can see hesitation, a lot of buying into this psychological area. Then we had a full week of selling. Further last week, another selling. So a lot of resistance at this level, the psychological area on our weekly. Okay, in order for us to remain upside positive, you can see on a weekly swing highs dictates up. Notice where the candle for this week is trading at this level. Okay, and you can see where the fib retracement or pivot area is at 15800. So a psychological break, or this pair fails and rolls over, then you're definitely seeing what we're seeing on a weekly as a seeding level, and the seeding level also coincides with the institution moving average. Okay, are we going to see price being pushed lower physically. Okay, and in doing so, the only the outcome for that would be a close below 15,800. So if this week closes lower than 15,800, then we should see further shorting opportunities. Okay, because we'll break this intermediate uptrend. The long term is still negative, and we'll break a very strong support. Notice we've had a full month now of support above this 15,800. That's the reason on the daily we've got to see 15,800 giving away to us. And in doing so, we'll see it roll over, forming a lower swing, and in doing so, then we should start targeting lower swings. Okay, 15,700 was one that was quite a predominant one recently. 15,600 is a very, very strong one, and then all the way back down to 1525. So, very, very important that we look for those levels to be broken. If that doesn't materialize, then we should start looking at intraday. 15,800, as I mentioned, that's where price needs to break. You can quite clearly see that price is trading above that level, and as long as it maintains above that level, then we should see potential for a squeeze or consolidation with an outlook for further attempts to the upside. Institution moving average still above price, and you can see that after yesterday's attempt to the downside, we've seen a bounce higher. However, we've seen a pullback over the Asian session. Okay, so now it depends to see how much of a pullback we see, but as long as it maintains above the institution moving average, then it is more likely for buying sentiment to creep in and then a reattempt to the upside. Hourly, what do we have on the hourly? Well, 15,800 we all know is a very strong support area, and you can see prices trading above that area as we speak. So as long as that maintains, then we should see ultimately re-attempts of the high. We are, however, seeing a failed attempt to the upside here at 1597, 15,900, which we know is quite close to 1600, so the psychological 1600 mark we're getting further away from, and in doing so it's forming lower swing, lower swing, lower swing, lower swing, and it's battling. RSI is below the 50 at the moment. It's been a bit of time playing with it recently, but you can see that overall on this chart, RSI spent more time below the 50 line than it did above it. Okay, so it's telling you that this is a bearish consolidative trend, because 15,800 is there. You can see we've attempted this area quite a few times in the past, and what we wanted to do is, if this is to remain bullish, we obviously want to see price trading above the institution, getting above the 50, confirming that there's more buying sentiment or more of a bullish stance long term. And if we do that, then ideally a break above 1597 would see price reattempting that 1600 that we saw, which is what we know on a weekly and daily a very strong psychological barrier. So the quicker it gets above 1600, the more likelihood we can see price trading to the upside. At the moment now, there seems to be more of a bearish stance. These lows are getting lower, these highs are getting lower, and we're still spending a lot of time below the 50. Yes, we've had a breakout here, but that failed to materialize, and we've seen price revert to the downside. So very, very important that if this is to remain bullish, then we need to see a nice bullish engulfing, breaking above this psychological 1591 here, and then we should see a reattempt of the 1600 mark. Until then, this will just continue to trade sideways in a consolidation motion, waiting for a breakout to occur. Next up, US dollar Swiss franc. Let's have a look at the daily. What did we get yesterday? Almost like a shooting star formation. Clear resistance in 920. A lot of resistance in 920. Has been a lot of resistance for 920 for a long period of time. 1, 2, 3, 4, 5, 6, 7. Almost a full week of resistance at 920. Is this definitely clearly showing that there is a psychological resistance level there? And if so, then that looks positively negative to me. Okay, so if anything, look for an open below the shooting star here, with 910 being a first target and ultimately back down to 900. I mean, the only thing that's going to cancel this negative candle here is a bullish engulfing. So you can do one or two things. You can either trade and look smart and look for a nice close below this 915 here, in order to look for an intraday short to 910 and possibly down to 9,000 again, or give us back to the market, wait for bearish engulfing to confirm this is negative shooting star resistance. Here we go at a clear resistance level, and then trade it to the downside intraday, or wait for a bullish engulfing to cancel that, and in doing so, forming a higher swing. So look over here, this is the previous low. This one here is higher than that. That's higher than that. So you can see market sentiment starting to trade up. So it's entirely your decision. But that shooting star does look quite predominant, especially after you look at where prices come to tweeze the top over here. So failure, 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 clear exhaustion. So with the shooting star formation here at the ceiling level here, trendline ceiling level, 920 ceiling level weekly. Today's got to be bearish. I mean, you can do, as I mentioned before, you can do one or two things. It's entirely your choice, but this is an exhaustion candle. The only thing that's going to cancel this exhaustion candle is a bullish engulfing. And that means giving back one full day to the market to see exactly what the outcome is. The other outturn for this is for this to genuinely be exactly what it is, and for price to break lower, and a break below 910 would see a nice move between 910 and 9,000. So intraday, let's have a look and see exactly what this could entail for us. But before we do that, we've got a high here and we've got a low. Okay, you can see price moving lower. Let's see what the fib retracement figure shows us. There we go. The 38.2 is the 920 mark. Smack bang right there. You can see it quite clearly, guys. 38.2 fib retracement is the 920, and you can see along this area how we've had a lot of hesitation in the past. So as long as 38.2 is in play above this price, then we should only be looking for ceiling. Quite clearly a week of ceiling. Why is there a whole full week of ceiling? There's a full week of hesitation. This exhaustion candle yesterday trying to build momentum to the upside, and that failed to. So this is clearly telling you that there's no more reason for this to trade higher. I want to go short. Okay, and I want to go short until such time as none of the 38.2 has been breached in our daily. So I'd probably look for a nice shorting opportunity right now, back down towards 910, which, as I mentioned, would be your 23.6, and then all the way back down to 100 or 9,000 in this case. We've been here to 9,000, now the 985, but 9,000 would be a good start for the beginning. So let's see what happens. We know 38, the 920. Put all these levels in on your smaller time frames. It's important that we get these in. So 920 we know is a very strong psychological area. 38.2, and we know that 91 is the 23. So we can put all these areas 91, 23. So we know straight away on our 4 hour, if price remains in this consolidated range and finds resistance here again, see the pullback. So we've broken lower and we're pulling back. Not a problem as long as that pullback stays below the 920. There we go, which should be roughly around the 50% mark. Then we're having a breakdown, pullback, and then a continuation lower. That institution moving average is in play. You can see price actually hesitated at this 910, which coincided with the institution. And if it fails, and you can see the exhaustion continues to the downside, then 910 will be our first port of call. Before a break below that would definitely signal further downside to at least the 9,000 mark, which we've been to quite recently. A lot of support here. So this is going to be quite an interesting one, guys. It'll be interesting if you can either wait for the candle to close below the institution moving here at 914, 91300, and then look for a nice entry to the downside. This being a new, if this gets below here, then this will be a new swing to the downside, and then we should take it. The stop above here, entry down here, and 9,000 as your first target. What's the hourly telling us? Well, we spent a lot of time above the RSI, but yes, we were clearly trading above the institution moving average, and we were swinging higher. However, as I mentioned, you can see on the hourly now how much hesitation was found at this 38.2 on the daily, which is the 920 mark. A lot of hesitation. We had this failed breakout. What we wanted from this breakout over here was a clear support. You can see the candle, this candle over here actually found support, and then the next set of candles would have had to close above this 920. So prior resistance becoming a breakout, pullback, new support, and then a continuation high. That failed to materialize because RSI broke lower. This candle closed lower to the underside. Very indecisive. We're looking for a decision candle. That's a decision on the underside, which was prior support. We were looking for a new support. Now it confirmed there was resistance, and then we saw price reverting to the downside. As we stand here, you can see quite clearly price is making its way lower. So the breakout, the pullback. Let's see this breakout here. So this is the high to the downside. You can see it only goes to 38.2, pullback. Now we're getting a bearish engulfing. Okay, are we seeing people moving in now to take this towards 910 to start with? It's your choice. You can either get into this, wait for the candle to close on the hourly. If it closes lower than 914, there's a fantastic bearish engulfing, which will clearly define that downside is definitely in play. RSI below. Yes, we're getting buy signals, but as long as price remains below 50, it's still negative sentiment overall. Last pair of the day is US dollar Japanese yen. Let's have a look and see what's been happening. After a noticeable run to the upside, 8,400 being a sticky point for this pair. A lot of indecision, bearish engulfing, shooting star, exhaustion, and then we've seen price reverting to the downside. I've taken a fib retracement of this upside move. The 23.6 acting as a great support for a number of days, a full week in particular. before we saw a definite break to the downside and the 38.2 being targeted. Since then, we've seen price trading at the underside of the 8100, which is the 38.2. Price support and resistance, so you can quite clearly see, but also the underside of the 50-period moving average. A lot of indecision candles for 3 consecutive days, all hugging the lower end of the wicks at the underside of 8100, confirming that there was more of a bearish stance for this, and sure enough, yesterday we had that move to the downside. Did you capitalize on it? It was there to be seen. So what we see now is the RSI, the CTC strategy giving us red across the board for the first time in as many months. Okay, so where's it going to now? Well, ideally, the 50% mark could be targeted. Let me just bring to your attention the 80 mark here. The 80 is a very strong weekly, monthly support and resistance. Okay, it's taken the US dollar a lot of effort to get to where it is now. Well, back up to 84. Is this a long-term pullback before we see further buying sentiment coming into here at 80? Because before, if I can just move out, I don't know how much I can show you here. There we go. Quite clearly, way back in June, July of last year in particular, a lot of support through here through 3 consecutive months. Are we going to see this as the bottom now? The true bottom of this pair for US dollar Japanese yen? It's I think it topped out or bottomed out at 75.50. Then we went to a consolidation range. You can quite clearly see a lot of hesitation for a number of months, 6 months, 7 months in total. Then we've seen the break of that. Now we've seen the rally. Is this going to be now one of these cases where we see price moving towards the 80, which is the 50% retracement of this initial upside move, before we see buying sentiment creeping in here, and then we're seeing what was a price support being a new support yet again, and then we can see price moving higher? That's one of the questions I'm asking myself. Yes, okay, we're moving into this, but you can see that a lot of selling to start with, then a little hesitation. There seems to be more hesitation. Yesterday's candle, after this bearish signals here on the underside, surely I would have liked to see this candle extending a little further. However, very tentatively moving towards the 80, which I presume is a pullback target or a place where people are looking to take profit to, because this being a very psychological, larger time frame target. Okay, are we going to start seeing price now coming into the fray, where we're seeing more purchasing contracts than selling contracts, and then we get a nice bullish engulfing here, or hammer of some sort, or a morning star formation at this area here before we see further upside back towards 81, back to 82, 30 or 20, and then back up towards 84, and then a rerun to the upside, which is what we see on our weekly here. You can quite clearly see on our weekly chart, 8400, noticeable support and resistance over here, clear resistance for a number of months, through September of 2010, right through until March of 2011. Hesitation, failed to break above the 50-period moving average, which acted as resistance level for so long. Is this going to be the case now, where we're seeing a huge move to the upside, then the pullback? 50% will take us to the 20-period moving average on our weekly at the 80 here, which happens to be prior support. Look at that. A lot of support through here, through November, or October, November, December, January, February, March, June, July of last year, guys. So it's a very strong support. Now we've broken above it, the pullback, now the second extension higher. I think we could see it. I don't think the Japanese government would want to see the US dollar falling below that level, because then there's huge talk that they'll probably intervene yet again and bring up the austerity measures, etc., to try and stem this downside negativity. So I think we could see a nice push here above the 80 mark. That's my call. I might be wrong. It might keep falling, but 80 is a very strong support and resistance, and I'm going to stick with that. So 80 has to be breached to see any further downside negativity on this pair. Until such time as price is trading above that, then I'm looking for potential bounce, a nice strong bounce. And you can see the hesitation now creeping into this. These lows not so formative compared to these massive drops beforehand. Yes, we're getting lower swings, which dictates downside trend, which is important. But I'd like to see this 80 being breached. Otherwise, we're going to see buying contracts sentiment creeping in here, and then we could see a bounce. If that bounce happens just short term, we're still likely to see a bounce. Okay, so you can either trade it upside favor for the time being, but lower swings, just recently swing low, and yeah, it's starting to get more hesitant now as we head towards a psychological 80. So that's it, guys. I hope you have a fantastic trading day. Make a note of all the news announcements and see if there's anything that's really going to move the market. and just trade it. Just trade it simply. Look at support and resistance levels. Look at genuine, strong support resistance levels that will affect price movement. Look for breakouts of those areas. Look for strong breakouts, strong confirmation moves or sentiment moves that will dictate, yes, this is positive, or yes, this is negative, and then trade it. If you are using the CTC strategy, the great beauty of it is it's quite a lagging indicator, so it gives you a nice fair warning that we should see these things. So treat it as it is. Don't try and complicate your trading. Make sure your money management rules also are in play and adhere to them. You don't ever want to be trading with an adverse risk reward, and have fun. Until then, trade serenely.